How's it going today? Today we're going to talk about the 5 stocks for June. Normally in June, or around this time of year, it's like the halfway point. So what I'm going to do today, this time, is do basically a countdown of the best stocks in my portfolio, and I probably just add to them in this weakness with the Trump trade talks and all that, and all this weakness. So, but a lot of these stocks have still not pulled back; they still just keep rising, and it's just so this is basically my top stocks so far this year, and I believe they could finish out strong and everything like that, as long as we don't have a big correction or big panic in the market, which anything can happen. So essentially, these are not like probably my biggest winners year to date. Not of all time, but year to date. I'm just going to kick it off. Number 5 is the trade disc. Basically, what this company does is it helps basically people advertise their marketing on stuff um, online. I made a full video of that, and I can leave it in the link down below that fully goes into the details of it. The stock is up 71% year to date. I mean, and put that in perspective, the S&P has returned 10%. So I mean, essentially, I mean, if you bought this or held on to it, like I've been how I advocate to do it. Basically, you would have blown away the market. Basically, so let's say you put $10,000 in the S&P, you're only up 1,000. You put in the trade disc, you're up 7,000. So essentially, just basically 7 times better than the S&P. So essentially, that's what you're really going against when you buy stocks. I mean, why buy stocks if you can't beat the market? And these stocks are basically what I call basically swinging for the fences stocks. Basically, that's what you're doing with these. They're basically high growth, big opportunities, and if they can pull it off and do things, I mean, the trade desk is not done going up. This could be honestly, trade desk could easily be well in the 50, $100 billion companies, and it's only trading around nine billion if it can pull off what it's trying to do. It's a massive opportunity and a growing industry, and really, I still recommend it today, and everything like that. Basically, moving on to number 4 is zscaler or ZS. Basically, I made a video of that. Basically, what it does is it's a cloud security company um, that basically all the data is going to the cloud and everything like that. So essentially, this what that company steps in and does. It helps out with protecting the cloud and all that. So essentially, I can leave another link down in the descriptions. Um, Basically, what it does, um, because I already made a video of it. It was one of the first stocks I recommended this year, and it's up another 70%, 72% actually year to date. As I'm filming this now, um, well, the S&P is only up once again only 10%. So essentially, another market basically just crushed it. Basically, I mean, that was one of these things you just you buy a couple of these and just sit back and watch it just keep going up. And that's even with the pullback of the S&P. The S&P was actually up about 17%, and it pulled back pretty aggressively the last couple of weeks. And these stocks, I mean, really no exposure to the trade talks and China and all that stuff. So there's really no exposure to China, so you're really getting all that benefit. Um, Number 3 is a stock I haven't really talked about a whole lot. I wish I would have spoke a little bit. I recommend it as a buy on my Facebook page. I haven't really made any YouTube videos. Maybe I should have a couple weeks ago. This is basically number 3, and that I wish So essentially, basically, what it is it's MongoDB. So essentially, it's picture it like almost it competes with Amazon Web Service, so that's why I haven't really. That's why the stock it got beat down kind of a little bit during the fourth quarter of last year, just because Amazon was launching it and it said it couldn't compete. So essentially, that's what really springboarded this stock up. It's up 74%. So I mean, it's another basically market crusher if you bought into that. And a lot of these stocks are over been up over 4 times since they IPO last couple years. So essentially, a lot of these companies are new, and it's basically you're swinging for the fences. So essentially, the MongoDB does go up 10% or 5% in a day, then goes back down 2% or 3% or 4%. It's very volatile. It's not like holding Facebook where it just kind of sits there for a little bit, then moves up a little bit, and sits and goes down and goes up maybe 1 or 2%. I mean, a lot of these companies that I recommend, you have to almost have the stomach for it. I mean, you have to look at your account. Sometimes you could be up, 2%, and then be by the afternoon you might be negative or might be up, and it's just how these stocks go. And they move heavily fast on news. Like when Amazon jumped in, I mean, the stock went down over 13% or 17%. Just on that news, but it was a great buying opportunity. I recommended that. This one I've been recommending more on Facebook. I could leave a link down in the descriptions for my Facebook page, so you guys can just go through Facebook and see my posts and everything like that. That I don't really have time to make a YouTube video for, because I don't really have time to keep up on everything. But that's one I recommend. MongoDB. Like I said, it's basically AWS. It does a little different. A lot of these cloud computing stuff, it's kind of confusing to really explain, because they all kind of do the same thing, but they're all slightly different. So essentially, and now the next company I'm going to recommend, number 2, is Okta. Basically, what it does is I forget exactly what they call it, like management. Basically, let's say a lot of your at your jobs, you have logins for your passwords. This is the company that helps out with that. It's not a cybersecurity type of play. And cybersecurity, I think it's going to be massive opportunities coming up. I mean, you have to think everything's going online, everything is digital, everything's on your smartphone, and everything with 5G capabilities and all that. So essentially, Okta would be there, and that's zscaler, ZS. Basically, I think that's why I recommend a lot of these cybersecurity. I actually did a report and talked more about it. I can leave another link down in the description. A lot of these stocks I've been really advocating to buy, because they just keep blowing it away. And Okta's actually up 81%. So essentially just another market crusher. I mean, that's 8 times more than the S&P. And it just keeps, it had an amazing quarter, had narrowing losses. So essentially, a lot of these companies, I think the only one that's profitable is the trade disk. But I really don't look at profitability per se. Profitability is kind of weird. Maybe I could explain it. It does have free cash flow, which is more important. The income statement gets kind of weird. You have to understand the accounting on an income statement. The bottom line, the Okta is a stock I recommend. It's been crushing it, doing great things, and really, as you can see, a lot of these companies, once I just read what the company does, I go, you know what, we need that in our society. It's going to be big, and that's really what Okta does. So essentially, the number 1 pick of this year is Shopify. Shopify has basically blown it away. It was one of these companies that I bought in a couple years ago, and it really was flat for almost a year. Almost for a year, it was flat. It didn't do anything. It just sat there. So essentially, it just kept growing and kept doing great things, and it had a little bit of slowdown, I guess, here and there. But for the most part, it had a great quarter, but it kept shooting up and then kept pulling back. But Shopify is up 115% now, filming it. That's almost 10 times the S&P. Shopify has just been crushing it. What it does, I mean, it's up. The revenue's up 50%. Last quarter basically just destroyed it. I mean, this is a company that has so much opportunity in it. I mean, if you really think what Shopify does, I made actually a video of I recommended it. And its stock and it doesn't even matter what that trade does, with the trade war. I mean, it doesn't really matter what it's doing or anything. It just seems to always keep going up, and it won't do that forever. I mean, everything goes up, and not everything comes down in the stock market, but a lot of it goes up, and it could just kind of sit there for a little bit, then they go flying back up, and especially if they keep putting up good numbers. So essentially, really, I mean, if you have a company that's basically flat, and one thing to take away from Shopify with this big run up, basically, if it's sitting around and not really doing anything, and it's having great quarter after great quarter after great quarter, it's eventually going to fly. That stock is eventually going. It's basically going to springboard it. So essentially, especially a lot of companies, a lot of bigger companies, a lot of these companies, they really shouldn't buy back stock just because they should be able to invest it back into their business. But essentially, if you have a company buying back stock and blowing it away, and the stock just keeps getting hammered or whatever, there's a lot of negative with it, and it eventually, once it reports, it eventually the stock just go flying up. So essentially, that's why you have to always kind of do long term, because God only knows what they do. I think stocks just kind of move randomly in the short term. In the long term, you can see obviously these the winners and stuff like that. Obviously the long term, Apple and Alphabet and Amazon, obviously they were big winners, and they're a big winner as a thing. So essentially, but that's basically it for Shopify. I can leave a link down in the description. Again, showing what Shopify does more in depth. I just basically going from, again, Shopify being number one, MongoDB, Okta, zscaler, and the trade desk is basically, I still recommend them. I believe in basically adding to your winners. Basically, you water the flowers and cut the weeds. If in my portfolio management, really, maybe I can make a whole video of how to do that a lot more effectively. So, because really, that's a lot of people just think it's picking stocks, but it's when to pick them, and maybe not when to pick them. I don't really like to time the market because, well, it's very, very difficult. You're really kind of guessing on that. But really, how to really manage your portfolio where you basically cut your losers and basically add to your winners. And that's really what I do. So essentially, if I have a stock that's down 20% and it's kind of heavy, what I could do is I normally cut that and then add to the winners, and always have kind of always try to figure out in life to have some kind of cash flow that you can always kind of put into your portfolio. So essentially, and then it just kind of compounds. So it's, it just keeps going up and up. So basically, that's what it is. I hope you liked it. If you liked it, leave a comment. If you own one, I hope you bought it at the first of the year because you've been on a run. I believe these stocks still has a lot of these stocks, they ain't done going up if they can deliver. That's all you have to think about. If they can deliver, basically these stocks will keep going up. For really years. I mean, if they can keep putting up numbers, I mean, they can really do very well. But anyway, that's all for today. I hope it was helpful. Hope you liked it, and thank you for watching. Thank you.